Hello there, my friends. Chris Marcus here with you for the StockPulse Network on Tuesday, October 9th. And we are fortunate to have a great guest on the show today, my friend Mickey Fulp, the Mercenary Geologist of mercenarygeologist.com, who has a lot of experience and a lot of the resources and the geopolitics, and was kind enough to join us today to talk about what he's seeing in the market. So with that said, Mickey, how are you doing, my friend? It's great to have you on here today.
I'm doing quite well, and thanks for the opportunity, and thanks also to StockPulse.
Yeah, well, it was great having an interview with you up at the Sprott Symposium and talking about the metals then. That was back in July. Now we fast forward a couple months to October, and would love to hear what you're seeing out there. Obviously, a lot of the metals are on the low end of the spectrum at this point. So what's your take on what's going on and where we're going from here and what people should be looking at with the metals?
Well, let's break that down. Let's break it down into precious metals, and specifically led by gold. And gold, basically, as it had when we were at the Sprott conference, has had various ups and downs, plus or minus $1,200 an ounce, and it depends on the U.S. dollar on a daily basis. So at the end of the last week, gold went up, went above $1,200 as the U.S. dollar went down. Last couple of days, U.S. dollar is up. It actually hit 96 today, and so gold is down. And as most of the other precious metals follow gold, perhaps with exception of palladium, which I think last time we talked, I promulgated the idea it's not really a precious metal, and it's an industrial metal.
Right.
But those metals have not performed well because we've had a stronger U.S. dollar. The base metal complex has also not performed well. It's down, I think, on total about 11% on the year. That has a lot to do with the trade tariff negotiations, trade tariff war, whatever you want to call it. It's hardly a war, in my opinion. We've now settled with both Mexico and Canada, and we've got some agreements in place in Europe. So as we all thought we knew, it's turned out to play this way. It's all about China. So China's starting to come around a bit, but until that happens, I think metals are, especially base metals, are going to be under a bit of a cloud. You know, as we speak right now, copper's at 283. It hit a low of 264 last month. So it's recovered somewhat, but until all this trade tariff stuff gets worked out, I think that the speculators who are driving those futures and options market, particularly for the base metals, they see they're massively short. And when everybody's on one side of a trade, they'll get handed their shorts at some point. So all in all, I'm a contrarian, so I'm looking at companies in copper space, especially at this point.
Okay, and I'm glad that you mentioned the dollar and the trade war, because like you said, that has had an impact on the markets. And certainly given that in this past year we've had the invention of the petro yuan, along with that China forming trade relationships with Russia, who actually sold the majority of their treasuries this year. And then on top of it, the U.S. starting a trade war with their largest creditor. I'm curious, I guess nobody knows for sure, but how do you see this playing out? Certainly that's what, the kind of factors that have led me into the metals and resources. And I'm wondering what you see happening with all this. It's a really fascinating situation, and curious to see how you see it playing out.
Well, this whole idea of establishing non-dollar platforms for trading of commodities worldwide is, I think that's fraught with difficulty. Who wants to own Russian rubles right now? Well, maybe you do. Maybe you think they're undervalued, but here's what I know about Russian rubles. Uh, and we'll talk about Chinese yuan in a bit, but the Russian ruble has lost nearly 80% of its value since 2014. Now, there's a couple of geopolitical considerations in there. Number one, their invasion of Ukraine, which knocked it down considerably, but also weakness in oil price because its Russian economy is highly dependent on oil exports. But uh, do you really want to own Russian rubles? Do you really think that alternative trading platforms is going to deal in rubles and yuan are going to have immediate effect? I don't think so. Eventually they may, but the old U.S. petrodollar and the agreements between Saudi Arabia and the U.S. that date back really since the end of World War II, but were solidified at the end of the first oil crisis. The majority of the world's trade is still done in U.S. dollars. So although I think that's going to change gradually, I don't see it having any immediate effect or even short-term effect. These are long-term ideas. I saw something today that Russia hopes to be done with U.S. dollars by 2030. We'll see if that's going to happen.
Yeah, and certainly I appreciate you point that out because certainly I've been guilty of thinking perhaps because things are obvious that maybe they're imminent, which can be two separate things there. Although I think, like you pointed out before, that while it may take time to develop in terms of the rubles and the dollars and how that plays out, again, the precious metals being one form of protecting against all of that. And along those lines, I know over the summer when we talked, you were really interested in platinum, and I'd be curious to see your thoughts on the platinum market right now, and if that's still something you feel is a good entry point for people to be looking at today, or how you're seeing that market.
Well, if we just look at the platinum to gold ratio, it hit an all-time low a couple of weeks ago. So the ideas that I were putting forth in the end of July or whenever we did that interview, I think are even more in effect right now. The platinum to gold ratio, I'm looking at my board right now, so bear with me, my spreadsheet. So we talked the third week of January or July.
July.
Third week of July, and the platinum to gold ratio was at 0.67, which was an all-time low. And sure enough, by the beginning of September, it was setting all-time lows of 0.65. So if anything, the idea that it was a good time to buy platinum is even more in effect. Right now, it's sitting at 0.68 as of last Friday. Perhaps more importantly, the platinum to palladium ratio set a low since the 2001 debacle when GM tried to hoard palladium. But that ratio right now sits at 0.77, so it's at a 17-year low. So if you look at those ratios, and as you and Andy and I talked about in July, we pay a lot of attention to ratios. That would argue that platinum's still a very good buy. It's undervalued with respect to other precious metals.
Yes, yes. And along those lines, one of the other things that you've mentioned in some of your interviews previously that I think is really important for people right now, where we see often the fundamentals suggest one thing, yet a lot of people have been sitting there waiting with a lot of these metals. Up in Vancouver, we talked about uranium too, which seems like it's on the lower end of the spectrum. But I liked how you phrased it, where normally when we go out to a store and things are on sale, people are happy. Of course, a lot of people who are invested and have been sitting there waiting are getting perhaps a little bit in the frustrated zone. So for the folks that are out there that are seeing these things and hearing the type of commentary that you're saying and saying this makes sense, yet a little frustrated or feeling impatient, I know you have some great thoughts on this topic. So, what do you advise to your clients and readers and the folks that are really facing that dilemma where maybe they've been hearing for years, this is what should happen, yet it hasn't happened yet? And I'm curious how you phrase that to folks to leave them in the position to have a good framework for how to make good investment decisions going forward.
Well, I think you got to be a contrarian, and as a contrarian, patience is your greatest virtue. So when you see things that look out of kilter, you see markets that are oversold and undervalued, then that's the time you want to enter them. And you just have to have patience. You can't get too excited on a daily basis about the way these metals move, or up or down, or their lack of movement. But you do your due diligence and develop some strong ideas about the way that markets work, and buy when things are undervalued, buy when they're on sale. So I can argue that things like copper right now at 280 or 283 this morning, is undervalued because a significant number of copper producers in the world are underwater. The highest quartile's underwater. They're losing money on every pound of copper they produce. So they'll quit producing at some point unless the price rises. So target price for copper would be where it was in June when it hit 329. I think it's going to take 330 copper for any significant new mines to be built or developed. And the annualized growth of demand of copper since 1900 is 3.4% a year. So we constantly need more copper. Uranium is another metal that's been undervalued now since soon after Fukushima. It's now at $27.55. We need a $40 uranium price for new mines to open in the U.S. now. There's some geopolitical considerations that would indicate that's going to happen, but as a contrarian, I would look at uranium as being the best entry opportunity at this time. But once again, these are medium to long-term views, and you have to have patience.
Yeah, and I really appreciate you touching on that, because certainly, again, while some people don't like that the prices are low, in many of these metals, the prices are below what it costs to actually go dig them out of the ground, which, like you said, means that if the price stays there, the incentive for new supply to come on the market is going to be less, which is, one of those natural self-correcting ways in which the market works. So with that said, can you give folks who are interested in getting some more information, just touch on some of the things that you cover and where they can find you and the services you offer, so people need a little help figuring out what to do and how to approach these markets, and maybe have a little help walking them off the ledge from time to time, which is a big part of it. Again, can you share the website and how they can find you?
Sure, it's mercenarygeologist.com. I write a newsletter. I publish on average a couple of times a month, 24 newsletters a year. I do lots of interviews and videos, etc. Um, if you want to get my stock picks, and bear in mind, I'm not a certified financial advisor, so I just tell people what I do in the market. Those are available to free email subscribers. So to get my stock picks on a timely basis, you need to go on my website, look at my mug shot, and click below the link below that and sign up. You need to give us a name and an email address. You can fake your name, we don't care, but you've got to give us a working email address, and then you get the stock picks. So that's the carrot we dangle out to get people to subscribe to the newsletter.
Yeah, and I think that's great. Certainly, given my experience on Wall Street, I'm less into the certifications and the titles as opposed to folks that are actually going out there researching and trading it with their own capital, which I know that you do. So certainly I'd recommend for folks to go visit your site at mercenarygeologist.com. And again, I'm grateful to you for coming on and sharing some insight with us on this beautiful Tuesday morning. We'll look forward to having you on again soon. And thanks as always for joining us, Mickey.
Thanks, Chris. It's been my pleasure.
All right. We'll talk to you soon.
Okay.